Hi, today I'm going to be covering the real estate market and giving you a little bit of an update on where we stand as of the end of September 2022. I think as I begin this, it's important to note this slide is kind of an indication of how many people might be feeling right now. There's a lot of talk about inflation, about possible recession, about interest rates on the rise, the housing market possibly shifting and cooling, stocks, cryptocurrency, whatever you're into. There's a lot of news out there that can cause some fear and anxiety. And I think when it's always good to kind of take a step back and look at all the numbers. And especially when it comes to real estate, to being able to hone it down to your specific area, because real estate is very local. You've heard the term, I'm sure, location, location, location. And that's true definitely when it comes to just looking at what your market is doing specifically. The first thing that we'll look at is median sale price. For median sale price, it's basically an indicator that shows when you have a price, there's the same number of homes that have sold above that price as below it. So those numbers are the same. That's where you get the median. And this graph here, the first one that we see, is only for 2022. So year to date, we're seeing that we did have it increasing over the spring, and then hit April, it actually hit an all-time high of $2.25 million. And that's pretty mind-boggling by itself, just to think about the fact that the median sale price is over $2 million. That did decrease a little bit with the months, and then starting July, we did see a significant decrease, a little more significant decrease, and July, August, September have all continued along around the same, with September ending at 1.75 million. It does feel like a significant decrease, but again, I think it's good to put this into perspective. And so coming to here, the second screen is showing median sale price since 2005. So back in 2005, we were at median sale prices less than a million, a little less than a million. And then with the recession, actually came down closer to 500, a little over 500,000. Since then, with the ups and downs through the years, and even through here with this red line, which is that shows the COVID lockdown in March 2020, even through all of that, we have steadily increased. And here at the end, you do see that same peak of April that showed 2.25 million and has gone down. So that we're at the 1.75 million that I mentioned for September. To kind of compare the different numbers, this represents the 1.75 million represents a 28.6% decrease from the all-time high of 2.25 million. If you take that further back, though, if you go back to September of 2021, which is right around here, that this comparison of this September versus last September is only a 6.7% decrease. And then if you take that back even further to 2020, it's actually up 2.9% from September 2020. So although it has gone down, it's still significantly above pre-pandemic levels. So I think that's really important to keep in mind. So it doesn't feel great to some homeowners who are feeling like, well, I missed that peak. But at the same time, if you keep perspective about it, keep it in perspective, it's still significantly higher, just because we had such a hot market during the last couple of years after the pandemic, after the lockdown, and things have started easing up. This is a look at months of inventory, and the way to look at that is basically if you take the number of homes we have in the market and the rate at which they're selling, how long would it take to run out of homes? And when you look at that traditionally, you see this green horizontal line, that's a balanced market. So that's basically saying this is where we want to, if you get to 6 months of inventory, that's a balanced market. Anything above that is considered a buyer's market. Anything below that is considered a seller's market. So if you go all the way back to 2012, we've literally been in a seller's market over the last 10 years, and hovering essentially around 2 months. For the month of September, we are at 1.8 months of inventory, which is higher than the year before. So September 2021, we're more around the 1 month. So in the past year, we've been more around the 1 month inventory levels. which is very, very limited. But even with all of the changes, the possibly cooling market, some price reductions, etc., we're still hovering around the 2-month mark. So that is significant to show that is going to be one of the major factors of what keeps our housing market strong in terms of prices, and is making still a bit of a challenge for buyers because there's just not a lot of inventory. And I'll be talking a little bit more about that at the same time, but definitely we're not in what you would call, as far as the numbers are concerned, we're not really anywhere close to a buyer's market. The next metric here that I'd like to look at is median days to sell. So this is how long it takes from when you put a house on the market until it actually has an accepted offer. So for September, that number here that you see it was 17 days. So that means that it takes 17, you put a house on the market and it could take up to 17 days average to be able to actually get an accepted offer. This is, it feels long for a lot of people because we're so used to having our timelines closer to the 10-day mark. If you see here over the last 2 years, it's more been hovering around 10 days. In some cases, at some points, it was 8 days. So that was an average. So we would actually see some homes selling before even hitting the market. Some that would go on the market and then have maybe one open house and get into contract. So we've been seeing a lot of that. And so 17 days may feel a little on the higher side, but it's nowhere, it's nowhere close to these levels here that you see in 2012 and earlier, where we're looking at easily 30 days, 40 days, 50 days average to see homes selling. So again, that even with all of the changes that are going in the market, that's probably a lot of that has to do with the inventory levels, that it's still limited. And there are still buyers out there who are looking to buy. This is a look at interest rates. So this is for the 30-year fixed rate mortgage. This comes from Freddie Mac, this data. And for the week of September, as of September 29th, 2022, the average 30-year fixed mortgage was at 6.7%. This is significantly higher, I'm sure you've heard, since the beginning of this year. And throughout the last year, we had people who were just at the beginning of this year getting interest rates of 2.5%, 3%, or the low threes. So we're talking about double, at least double, if not a little bit more in terms of the mortgage rates. And we do know that the Federal Reserve is set to meet 2 more times this year, and many people believe that they will continue to raise the rates. These are not mortgage rates, but raise the Fed rate, so that may have an impact on pushing up this average 30-year fixed mortgage to even the 7% levels. Some people believe or are hoping that the lenders have already factored in possible rate increases. And so maybe we could possibly stay in the mid 6s. One thing that I like to show this chart because this goes all the way back to the 1970s. And I like to show this because it does feel high because we've been dealing with 2 and 3%. But on a historical level, it's really not as bad as it feels. If you go back to here, the peak, that's 1981, and the interest rates were well into the 18% range, and people were still buying and selling. The one big difference, obviously, is that the home prices are much higher than they used to be. The loan amounts are much higher than they used to be. But at the same time, just keep in mind that people buy when they need to buy and sell when they need to sell, not always just limited to interest rates. And when I started real estate in 2008, the interest rates were right around 6%, and all of the agents around me and my managers were telling me, oh, this is a great rate because it's, so much lower than what it used to be. So I was right around here. And so just keeping that in mind on a higher perspective, it's not as bad as it seems. Another thing that I would note is that for our area, a lot of the loans are actually what's considered a high enough amount that they're considered non-conforming or jumbo loans. Those tend to be, for our area, again, it's if you have a loan that's above $647,200, up to that is a conforming loan limit, and then after that you go higher into the non-conforming and jumbo loans. And a lot of the banks actually offer more attractive rates than this. So we're seeing even low to mid fives if you're in that space. And then finally, what I would say about this is that many people are expecting that these rates, interest rates for the mortgages may come down in a year or two once if we do enter a recession, or in any case get inflation a little bit better under control, that these will probably be coming back down again. So if somebody wanted to take a loan now and then refinance in a year or two, that might make sense to go ahead and do that. So in the field, what are we seeing? Well, we do still have a lot of homes that are staying on the market a little longer than we'd like them to. Currently, out of 628 listings in the whole county, single family homes only, there are 206 of them, which is about a third, have had a price reduction. So we're seeing that, and their average days on market, the time that it's taking them, that they've been on market, is 87 days. So that's quite long. That will probably bring up our days on market metric later. We'll see that later as they close, but that's pretty significant that you have a third. Some of it has to do with sellers having to adjust their expectations. The shift when, as I showed you before, in July, it kind of went down. The median sale price went down somewhat significantly, but sellers weren't quite ready to adjust their expectations. So I think that's really important to be able to do. And people, I think, are starting to understand that more than they have during the transition. And at the same time, I would say it's a lot more important than ever to optimize the house and make it move-in ready. Make it easy for buyers so that they're not worried about supply chain, about inflation of manual labor, that kind of thing, to be able to remodel a house. So if they can just move right in, I think that makes it that's a great option. And we are still seeing properties that are getting multiple offers higher than asking. So it's not an impossibility. It's not that every single house is just sitting there. There are homes that are continuing to go on market and turn over. And again, there are still homes that are getting multiple offers. We are seeing that buyers are hesitant mainly because of all the news out there that, oh, well, the interest rates are going to continue to rise, the market's going to go down, and prices are going to go down, and so they're a little bit nervous or wanting to wait. I think that could be a mistake, and that it's really important for buyers to really see that there are opportunities out there. If the interest rates do go up, that will negatively impact, even if the housing prices come down somewhat, it will still, because of the interest rate being higher, that will kind of cancel each other out. So my main takeaway always is look at the numbers, that's good to know, but importantly, think about your personal goals. Whether it be selling, buying, or selling and buying, whatever it may be, there are a lot of opportunities out there right now for the buyers. Whether it be your principal residence or investment property. The rental market seems to be picking up a bit, so we're starting to see the rental prices actually going up. Again, the inventory levels are still quite low. So for sellers, if you just adjust some expectations, at the same time, prepare the home for sale and list it well. Sellers are still going to make out very well. Maybe not the peak of April 2022, but still very well, because this is just a great place to live. So with that, I'll just say, please, if you have any needs in terms of buyer or selling needs, please, you'll feel free to reach out to me, any of your Perisson agents, or any other, your favorite real estate agent, and make sure that you get all the information and make your decisions accordingly. And again, don't try to time the market. I'll try to keep you updated in terms of what the market does over the course of each month and the rest of this year. I talked to a lot of colleagues, and the sentiment is that usually we have a pretty good spring market, so we expect that we may have a little bit of bounce in activity through the fall of this year before the holidays, and then in the spring, hoping to have a little bit more of a pickup in activity. But we'll see what happens, see what the Fed does, see how we get through the winter. inflation, recession, and whatnot. But just know that we're always here as a resource for you.